The S&P is continuing to coil right in this zone coming into tomorrow, which is the big VIX expiration and FOMC, and it's going to be a big day. Are we going to break out of this zone and come back and tag this big 6100 strike, which we've actually approached twice in the past 2 weeks? Or are we going to break down and start to retrace a lot of the run-up that we had throughout November? Going to be a big decision day, so it's going to be key to watch the data as it comes in real time. A couple of interesting notes about the volume today. We had big volume again at the 6150 strike. We brought this up in yesterday's video as well. We had, I believe, 200,000 contracts traded yesterday at the 6150 strike. Today, another 100,000 contracts. We also had 100,000 contracts traded at the 6100 strike. So big volume coming in here at these levels, way higher than where we are currently trading. It is also notable that we had some decent volume here at some lower strikes between 6,000 and 6050. I would say, just from a bird's eye view, it looks like the volume to the upside is far outpacing the volume to the downside, as we can see here. And this is, again, this is options volume coming in the market today, and this feeds into our gamma exposure data. Of course, open interest is a big component of gamma exposure, and so you can see we've got the big 0 DTE GEX that, of course, is rolling off today. But outside of that, we've got 6100 and 6150, which continue to act as magnets. And so if we can get out of this zone here that we highlighted earlier, if we can break out, the next obvious targets are going to be 6100 and then potentially 6150 if the momentum continues. Those are our upside targets, and I think the scales are tipped to the upside for a year-end rally. And since we have VIX expiration tomorrow, let's take a look at a big picture view of the volatility index itself. Trading at 1587, you can see just how low we've been for the majority of the year. And on our chart here, this move up looks really, really small. But in fact, when we actually take a deeper dive, the VIX was up 8% today. So pretty interesting above this 15 level, and I start to get a little worried as far as accelerating catalysts. We oftentimes will see divergences between, for example, the VIX and the VVIX, and so this is something that we often will look at, divergence between these two indicators. And what we've been seeing for the past several days is an increasing VVIX and a slowly increasing VIX, and it looks like today the VIX might have started to play a little catch up. Let's actually just take a look at the VVIX real quick, and we see a similar pattern. We actually had a pretty big move up here a couple of weeks ago, preceding this move that we are now seeing in the VIX. So that's going to be something to watch here on the VVIX. If we break out above this 100 level, potentially above the 110, things could start getting dicey if that continues. Again, a lot of this remains to be seen. We really need to see how the market handles VIX expiration and the FOMC tomorrow. Next, let's take a look at Bitcoin. Bitcoin trading about 106,000 currently, but we got as high as 108,000 and change earlier today, and it just appears that the market continues to trade towards the big gamma exposure level at the 110,000 strike. The gamma exposure at this level has really started becoming prominent ever since we had this peak up here. Of course, we had the retracement pretty steep following that, but this GEX level kept screaming out that the market was expecting higher prices, and sure enough, we've gotten a rally attempt up to that 110,000 strike. We actually are seeing some GEX grow at the 115,000 strike as well. I'm not sure if we're going to get all the way up there, but the 110,000 strike does look like what market participants want. Maybe a little bit more consolidation, maybe a slight pullback, but it looks like market participants continue to position at higher strike prices. The 110,000 strike is our upper dealer cluster zone, so if we do reach that level or slightly above, I would expect some selling pressure to kick in. We saw the same thing back here when we reached above the 100,000 strike. This was actually our previous dealer cluster zone. And as soon as we jumped up through that zone, we had immediate dealer selling pressure come in. And that's typically what we see around these dealer cluster levels on the upside. Let's take a look at Ethereum. Ethereum just under the 4,000 mark. Not quite as bullish in the past week or so as Bitcoin. You can see we just barely got right back to the previous highs and have not broken out above that level since. The largest GEX, of course, is at 4,000, but we do have positive GEX growing all the way up to the 4,500 strike with some pretty decent volume coming in up there as well. So it is possible if we can get another push above that level, Ethereum could break out and see another 10% rally. But again, not quite as bullish looking as Bitcoin has been this past week. Next, let's turn to NVIDIA. A lot of people have been watching NVIDIA lately. It's really been struggling basically for about a month and a half now, ever since it made several attempts at the 150 strike and then really just kept rejecting. And basically we've been in a downtrend ever since. We do still see positive gamma exposure concentration at the 140 and 150 strike. This is interesting levels for a potential bounce, but we just haven't seen that bounce really come in. Potentially today was this capitulation move right here. Hard to say. We did get back above the 130 strike to close today. So we'll see if that momentum can continue up back into the 135 and potentially 140 strike. But I'll tell you, as far as the gamma exposure goes, if we can get above this 140 strike, this is going to be huge momentum boost coming back up to this 150. That's a tall order for NVIDIA right now, so it would be a very speculative bet to make, but it is possible, and there are people in the options market clearly that are making that bet, and we see volume coming in every single day. I mean, look at the 140 strike, well over 200,000 contracts trading at that strike. Today, we also had over 200,000 contracts at the 135 strike. So there is plenty of volume, plenty of optimism still in NVIDIA, at least in the options market, even though from an equity standpoint, we are in an intermediate downtrend. So definitely something to keep your eye on. Next, let's take a look at Apple. Apple trading above 253 today. Look at this beautiful uptrend that the stock has been in. Even though we're right in our upper dealer cluster zone, we see GEX growing at these higher strikes, 255 and 260. So we may see a little bit of a pause in this zone, potentially a pullback to the 250 level, which currently is the largest gamma exposure concentration. Any consolidation or pullback would be an interesting opportunity to get back in for another move into the 255 and potentially to the 260 range for an upside move into year end. Apple oftentimes is a great play into New Year's, and so this could be one of those years where the stock is just trending higher into the holidays. And so that's something we want to watch. The gamma exposure is suggesting that market participants are piling into these higher strike prices. And so this is a name that's done particularly well in the last couple of months. Next, let's take a look at gold. GLD trading just above the 244 level. We hit this 250 level a couple of times in the past month. This was the largest gamma exposure concentration and still is. So even after both rejections, we made attempts to come back, rejected again, and we've basically been hanging around the zero gamma exposure level for the last several days. But this really looks like a great area of support. This 245 zone has served as support over the last couple of months, and the gamma exposure on the upside, it still looks strong. So it looks good for a January and February move. We're going to see if we can get some momentum coming in, get above that 250 strike. I think third time would be a charm for a continued move up into potentially into the 255 and 260 zone. We wouldn't expect that until probably January or February, but that is something that we're watching. So we're going to be continuing the conversation in our community Discord. I'll put a link down in the description below. I really encourage you guys to come on in, check it out. It's free to join, and we've got a lot of great channels in there, so you don't want to miss that. Also, be sure to check out geeksoffinance.com. You can sign up and become a member if you want access to our gamma exposure data or our option flow analytics tools. I'll put a link down in the description below for that as well. Thanks so much, everybody, for watching, and we'll see you guys in the next video.